Guys, this is S&P 500 weekly technical analysis for the week of March 10th. After hitting the all-time high 6147 on Wednesday, February 19th, the S&P 500 has lost 7.85% from this top to the yesterday's low. Now this will be the expected high of the season. This is what we knew since last year, October 2024. And if you have subscribed to my YouTube channel or if you are my Patreon community member, then repeatedly I mentioned this. Okay, 614x. The zone which starts from 614x will be the expected peak of the season. Now the question is that what will be the expected low? So for that you need to understand this is the Fibonacci retracement. So when I draw the Fibonacci retracement from October 2023 to the high that was February 2025, then the 23.6% of the Fib is 5665. And if you notice, yesterday the low was 5666 and the 23.6% of the Fib retracement was 5665. This 5665 is also my calculated support level. So this means that the S&P 500 is allowed to retrace, but the retrace will remain limited and restricted to at first 579x and then the zone which starts from 585x. And only when these two conditions are fulfilled, S&P 500 will be finally allowed to move to 593x. However, at the same time, if the S&P 500 loses this the 5665, not 5666, 5665, in that case the market will be ready for the next one, that will be 53xx. So whether it will retrace or if it will come down, and all of these are conditions I will discuss in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, before I discuss the agenda of this S&P 500 weekly technical analysis, let me give you a quick idea of what we were anticipating and why there was this heavy fall and why I am saying again a rough movement. Now on Monday, S&P 500 gave a gap up open, moved up and failed to sustain at 598x. There was a rejection from the 598x. But still, even after the rejection, S&P 500 was holding because the Dow Jones was holding a very strong support level that was 433xx. So this was my important update to my Patreon community members on Monday. Okay, and here I mentioned during the fall that the Dow Jones have lost the strong support level and the strong support zone. This is why there will be no recovery for the S&P 500. However, the most important part of this, the update was this, that if the SP 500 closes inside the zone that was 585x, okay, the zone that starts from 585x, then it will create a sandwich pattern wherein bearish movement and momentum will be expected in the coming days or in this week with some limited recovery. So the S&P 500 on Monday closed in this pattern, in this the bearish sandwich pattern, and this was my midweek update on Wednesday. And again in the video technical analysis, I mentioned the bearish sandwich pattern indicating more fall, more bearish movement and limited recovery. Then on Tuesday there was a gap down open. It tried to move up but failed at the zone, and then it came down. High was 5865 and the low was 5732. And here in the midday update to my Patreon community members, I mentioned that now any fall is expected to be handled by the expected technical low, which was around 5750. And even if there comes a breach to the 200-day EMA, then also it is expected to recover the technical low. So on Tuesday it came down to 5732, but it recovered and closed at 5778. Now on Wednesday there was a very good bullish retrace. The low was 5742 and the high was 5860. So in my midday update on Tuesday, I mentioned that the bullish side will be restricted to the zone that starts from 585x, and that will be the best case scenario. Wherein the bearish side, it will be up to 200-day EMA. Okay, that was on that day 5708, but with a condition that the SP500 will recover back to the zone, at least to the zone. Now on Thursday there was this fall. Now this fall was the result of the rejection, of the failure. On Thursday the high was 5812 and the low was 5711. So in my midday update on Thursday to my Patreon community members, means if there comes a hit to the 200-day EMA, then also S&P 500 is expected to retrace back to the 575449 zone. And also the bull side will now remain limited to the 582x maximum on Thursday. Now yesterday on Friday on 7th of March, what we have noticed is that the low was 5666 and the high was 5783. So that is why in my midday update to my Patreon community members yesterday, okay, I mentioned this the same condition. So guys, if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So finally the S&P 500 has come into the neutral condition, 50-50 on the weekly chart. For last almost 2 years or 1.5 years, S&P 500 was trading in absolute bullish trend. Okay, now this absolute bullish trend is coming into the 50-50 in the neutral zone. Okay, now although it is in the neutral zone on the weekly chart, but still it is sustaining in the bullish side. See, there is this the neutral zone, this is the bullish side, this is the bearish side. So it has come into the neutral zone, but it is still in the bullish side. If there comes some good reversal in the next week, not 1 week, but in next 2 weeks, in that case S&P 500 will be able to come back into the bullish side. It will not be 100% absolute bullish, but it will be like 60 to 70% bullish. Okay, and it will remain in the bullish trend. However, if the bullish reversal is seen limited, as we are expecting, limited, and then there comes the fall, okay, and it moves to, and the S&P 500 move towards 53xx, then what will happen? In that case, this neutral will change to the bearish, and finally after 1.5 years or 2 years, the trend of the market will finally change to the bearish. Okay, and this bearish means correction. Market will be heading to the correction and then eventually to the recession. The second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, S&P 500 is 100% absolute bearish and the short-term trend is bearish. Okay, this was confirmed as early as on Monday that it is now 100% absolute bearish. Okay, so every day in my pre-market analysis, I have mentioned the same. It is 100% absolute bearish, S&P 500, Dow Jones and Nasdaq. Okay, now on the daily chart, there is a condition because of this 23.6% of the fifth retracement level, and also once again the divergence is still there. Okay, last week also I mentioned the divergence. Okay, so these bullish candles that you are seeing, okay, or the market's unwillingness or the market's hesitation to come down every day heavy red, okay, it was because of that divergence. So I will not say that the divergence has normalized. No, the divergence is still heavy. Okay, that is why we are seeing like 2 red candles, 1 green candle, 1 red candle, 1 green candle. Okay, because every day this divergence is increasing and the divergence is getting heavier. So I will show you the charts and the MACD. Okay, I will show you that how much divergence is there as of now. Third and the last point of the agenda is the probable movement of the SP500 from March 10th, which is Monday, through March 14th, that will be Friday. Whatever is going to happen in the S&P 500 in the next week, that I'm going to discuss in this, the last point of the agenda. But guys, once again, let me remind you that all of these three sections are interrelated, are interconnected. Okay, so when I say the probable movement here, this means that by the time I come to discuss the probable movement in the point number 3, I have already discussed 30% to 40% of the probable movement in the first and the second point of the agenda, because I discussed the candles, patterns, okay, these are favorite tracements, and these are important things in the first and the second point of the agenda. This is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the S&P 500, Dow Jones, Nasdaq, in the entire market in the next week, and what will be the reason and why that will happen. So now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now let's discuss this, the last candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. If you also want to get these daily precise updates of the S&P 500, Dow Jones, every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's discuss this, the last candle. This candle is a very heavy bearish candle, okay, and intra week we have seen 5.3% fall, okay, and from the previous closing we have seen around 5%, 4.9% fall, okay, very heavy fall. Other than that, the closing of this candle is below these two moving averages, okay, or these three moving averages, okay, so that again makes it very heavy. Other than that, the closing of this last candle is below the open and the low of the recently seen this candle, okay, this heavy bullish candle of in the week of January 13th, okay. So why this is significant that it closed below the low of this candle? This signifies that market is under very heavy pressure, very heavy bearish pressure, that it failed to defend the low that was there through this candle. Okay, this indicates more fall in the coming days or in the coming weeks. And this further indicates that now there are good chances that finally after 2 years or after 1.5 years, after that heavy bullish run, okay, finally there will be a bearish trend in the long term. This bearish trend means correction and then eventually recession, okay. So now in simple terms, okay, considering all of the factors, it's a very heavy bearish candle indicating continuation of the bearish movement. That's it. On Monday, Tuesday or so, okay, irrespective of any open or any movement, there will be an initial intraday bearish movement, continuation of the bearish movement. Okay, one more thing, if you notice, there is this the moving average in the picture. S&P 500 in the previous week, in this the recent week, failed to test this the moving average. Okay, this is the weekly chart. Okay, generally whenever S&P 500 comes down, okay, it always tests this moving average. This means that now S&P 500, even if it try to move up, this bullish retrace will be limited and eventually it will have to come down to test this moving average. So when it tests this the moving average, then we will be looking for the closing. Where will be the closing? Because a closing below this moving average means S&P 500 will be ready for 53xx. A closing above this moving average means S&P 500 will get one more week to correct itself, okay, and to try to get some bullish reversal, bullish retrace, okay. Now comes the Dow Jones. This is the Dow Jones. So if you are new to my YouTube channel, okay, then I always analyze the Dow Jones irrespective of anything, because Dow Jones gives us a clear idea, okay, and tells us whether whatever we are expecting to happen in the S&P 500 will happen 100% or not. This is what is known to the Dow Jones, because Dow Jones is the prime index of the US stock market. Now in the Dow Jones, okay, again very heavy weekly candle, okay, Now the most important part of this candle is what? It is in absolute bearish engulfing. Absolute bearish engulfing the weekly candle. Okay. Whereas this last weekly candle of the S&P 500, there is no engulfing. Okay. So what is this, the bearish engulfing? So you might think of this as a sandwich pattern, but it is not a perfect sandwich pattern. Okay. But the most important part is that there is absolute bearish engulfing. This means that generally, especially if it is seen on the weekly charts, then what happens? In these cases, the next the next weekly candle that forms, it is also of the same color. Same color means red. Okay. So in most of the cases, this is what happens. In this, the absolute bearish engulfing, especially on the weekly chart. If this happens on the daily chart, then it is not confirmed. Okay, but whether it will happen. But now I'm talking about the weekly chart. This has happened on the weekly chart, so there are good chances that the next weekly candle in the Dow Jones will be a red candle. Okay, but there is no 100% guarantee or absolute confirmation. If this would have happened in the absolute, this the sandwich pattern, then 100% there was a guarantee that the next candle will be a red candle. Okay, but still the engulfing is there. Okay, the bearishness is there, so good chances. But other than that, okay, irrespective of any closing or anything, okay, Monday, Tuesday, okay, or any day or every day of the week, the market will remain under pressure. Okay, if it try to move up, then also it will give up and it will come down. Okay, this is the bearish engulfing. Means it's the bearish engulfing. It does not restrict the bullish retrace. The bullish retrace is allowed. It does not restrict the bullish retrace. It is allowed. Okay, but this bullish retrace should be limited, not heavy. It should be limited. Okay, and then it should give up in this manner. Okay, so this is how it works, right? So again, bearishness through the weekly candle of the Dow Jones. Okay, and it is more bearish as compared to the weekly candle of the S&P 500. So that is why in my this the mid week update in this technical analysis on Wednesday to my Patreon community members, I have discussed in detail the bearish sandwich pattern and why we are anticipating more fall, more bearishness. Okay, so this bearish sandwich pattern is not seen in the Dow Jones, but a bearish engulfing is seen where the next candle has completely engulfed the previous candle from top to bottom. Okay, and this has seen on the weekly chart, so that is why it is very important. And on Monday, even before the closing, okay, 3 or 4 hours before the closing, I mentioned that this bearish sandwich, it will create a sandwich pattern, okay, if it closes in this manner. And this means that bearish movement and momentum will be expected in the coming days with some or limited recovery. So what we have seen again and again, only two bullish candles in the entire week. Okay, and that was only limited recovery to what? To the zone 585x zone that starts from 5. So this zone starts from 585x. Okay, the recovery was limited. And then the second bullish candle, the recovery was limited to the 579x. This is the resistance level. Okay. So in this manner, okay, the S&P 500 has worked and is going to work. Now let's talk about the technicals. So technically, the S&P 500 is bearish through the Bollinger Bands on the weekly chart. S&P 500 is neutral through the moving averages on the weekly chart. SP 500 is bullish through the Ichimoku cloud. Bearishness. MACD is bearish. Stochastic RSI is bearishness. Okay, and this is what we were anticipating 1 or 2 weeks earlier, that if there comes this the bearish slip, kind of bearish slip in the MACD, then there will be more fall. Okay, and so MACD is bearish, stochastic RSI is bearish, and it has not hit the saturation, okay, or the technical low, okay, through these indicators. So all of this indicates that the S&P 500 is trading neutral. It is trading neutral, means 50-50. Why? Because the bearish MACD, bearish stochastic RSI, this combination, and if you have subscribed to my YouTube channel for last many months or years, then repeatedly I mentioned this combination indicates momentum, bearish momentum. Okay, this means that even if the S&P 500 try to move up, then also most likely, highly likely, it is expected to fail and then it will be coming down. That is why when it started to happen, I have repeatedly mentioned to my Patreon community members that any bullish retrace will now be limited to. At first, the bullish retrace was supposed to be limited to the zone that starts from 585x. Okay, and by yesterday, on Friday, okay, then it came down to 579x. Okay, so any bullish retrace will be limited because of this heavy bearish momentum. Now let's analyze the Dow Jones. So in case of the Dow Jones is bearish through the Bollinger Bands. Dow Jones is neutral through the moving averages. Dow Jones is bullish through the Ichimoku cloud, and the Dow Jones is bearish through the MACD. Dow Jones is bearish through the stochastic RSI. And yes, that was not actually the S&P 500. That was the Dow Jones. Okay, you can see a clear, okay, that we were anticipating a bearish slip through the Dow Jones. Okay, because in the Dow Jones it was very, very near to get or to give a bullish crossover. Okay, but now because of this heavy candle that was seen in the week of February 18th, okay, the slip was seen, the bearish slip. Okay, so again, Dow Jones, okay, that's almost the same condition. Bearish MACD, bearish stochastic RSI means bearish momentum, heavy pressure on the market, on the Dow Jones and on the entire market, entire US stock market. Okay, so Dow Jones is again, it will be seen as neutral, means 50-50. Okay, but because it is still sustaining above the Ichimoku cloud, closing and sustaining above the Ichimoku cloud, just like the S&P 500 closing and sustaining above the Ichimoku cloud. That is why, although it is neutral, but still it is in the bull side. It is in the bullish side, bull side. Okay, so that is why I'm saying that it will take, okay, I've repeatedly mentioned, it will take 1 month, okay, or more than a month, okay, before we can see the clear bearish trend. As of now, S&P 500, Dow Jones, Nasdaq, the entire US stock market is transitioning from bullish to bearish. Okay, this transition from bullish to bearish is time consuming, is time taking. It takes a minimum of 1 month. Minimum, not 1 month, but 1.5 months minimum. Okay, and then it can take up to like 3 to 4 months before we can see that it has finally transitioned to the bearish side. And also the same happens from the bearish to the bulls. Okay, minimum 1.5 months. This means that if it continues, if every week there comes bearish candle, next week also, 2 or 3 weeks also, okay, then by the end of March or by early April, okay, we will see that it has fully transitioned from the bullish trend to the long-term bearish trend. Okay, what I'm saying? Long-term bearish trend. Okay, long-term bearish trend means correction and then the potential recession. Okay, these two things. But guys, you need not to worry about any correction, recession, fall, bullish or bearish, anything. Because whatever is going to happen or whatever will happen, I will keep you posted, I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. Monday, Tuesday, Wednesday, Thursday, Friday. And it is not just about these daily precise updates, because I also give the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market, the top 30, 40 companies, the blue chips of the US stock market every week. And this is not all, because I also give the mid-week update. Every Wednesday or Thursday, I give the mid-week update. This is the video technical analysis, wherein I mention all of these important factors and all of the important numbers, okay, the support levels, the resistance level, and then the retrace to what level, and the fall to what level, each and everything clearly in this video technical analysis. So guys, if you also want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, okay, the pre-market analysis, which is given 1 or 2 hours before the open of the stock market, the midday update, which is given after 3 hours, and the final update, which is given 1 or 2 hours before the closing of the stock market, every day from Monday through Friday, and also the stock market opportunities and the midweek update technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see 3 levels. These are the 3 levels. Okay. So these 2 levels are same. The only difference in these 2 levels is the geographical location. Okay, that's it. So when you subscribe to any of these, either of these 2 levels or any of these 2 levels, then you will be getting all midweek update videos which I post every Wednesday or Thursday. Daily SP500 analysis, updates, movement, momentum, levels, zones, and the stock market opportunities 5 to 10 every week. However, when you subscribe to this level, okay, or this tier, then you will be getting whatever you are going to get here by default. Okay, you will be getting all midweek update videos, daily SP500 analysis updates, movement, levels, zones, stock market opportunities 5 to 10 every week. So you will be getting whatever you are going to get here by default here. Other than that, I will also schedule a Zoom video session, a Zoom video meeting. So this will be a one-on-one session only. And what I'm going to share in this session, entry and exit secrets, when you should enter, when you should exit, when to maximize your profits, when to minimize your losses, everything, entry and exit secrets. One premium hack, one hack. Okay, this hack works with 100% accuracy and 100% of the times. And this is a hidden and premium hack that you might not have seen or heard of. Then I will share one trading or options strategy. So again, this strategy works 100% of the times with 100% accuracy. Okay, just like the premium hack. Then the modified technical indicators. I am using the modified technical indicators, and through these technical indicators, I am able to predict the movement even before it is seen or even before it happens. Then the options premium calculator. Okay, because I know that more than 95 or 97% traders, they do not know how to calculate the premium value of the option. They cannot forecast, they cannot calculate the current and the future value. So I will share the premium calculator, options premium calculator. So this level or this tier gives you much more than what you are anticipating or what you will be expecting. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire market every day. Pre-market analysis, midday update, final update, stock market opportunities, mid-week update, the video technical analysis, and they are very well aware of what is happening or what is going to happen. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link, you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda, and here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Okay, one candle means one day. Now, let's first analyze this, the last candle. If you notice this last candle, okay, it's a normal bullish candle. There is no defined shape or pattern of the candle. Okay, but see, although it is a bullish candle, okay, but there are no significant bullish characteristics in the candle itself, through which we can say, okay, that now next week there will be a gap up open or it will move up, okay, or so. No. However, when we look into the candle through the technicals, okay, the 200-day EMA, it closed above the 200-day EMA, yes, bullishness. Okay, it closed above the 23.6% of the fib retracement level. Okay, so yes, once again, bullishness. Okay, this means that on Monday, irrespective of anything, we can anticipate bullishness, means an initial or intraday bullish movement. Okay, Dow Jones. This is the last candle of the Dow Jones. Okay, almost the same thing is there. It is also bullish, but no defined shape of the candle. but because it closed above the 200-day EMA. Okay, so again, some bullishness. I am saying some bullishness. I'm not saying absolute bullishness. No, I'm saying some bullishness. Okay, some bullishness means that S&P 500, sorry, the Dow Jones. Okay, on Monday, Dow Jones can try to move up. Okay, so initial or intraday bullish movement is allowed in the Dow Jones. This was through the candle, and now it will be very much clear through the technicals. Okay, where the S&P 500 will be heading to. But guys, before that, in order to appreciate my work so far, if you have liked this video, then hit like. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's analyze the technicals. In terms of the technicals, nothing new. Okay, S&P 500 is bearish through the Bollinger Bands, bearish through the Ichimoku cloud on the daily chart, bearish through the moving averages on the daily chart, and also bearish through the MACD on the daily chart, bearish through the stochastic RSI. All of the technicals are indicating bearishness. Okay, once again, same thing. Okay, the MACD. The MACD, there is still heavy divergence in the MACD. And as you know that I always rely on the technicals and I do not speculate. Okay. So whatever I am saying here, I am showing you that on the charts that whenever there comes heavy divergence, then that heavy divergence is not allowed and we see very good or very sharp retraces. Okay, in the bullish trend we see heavy fall, in the bearish trend we see heavy the bullish retrace. And this divergence is not this heavy in the MACD of the S&P 500, but it is really very heavy in the Nasdaq. Okay, so Nasdaq, the divergence is like very heavy. Okay, that is why any more fall, okay, will simply increase the divergence. So that is the reason why we are not seeing everyday red candles. Okay, intermittently we are seeing green candles. Means the market is trying to retrace. Okay, however, it is not getting any opportunity or any chance to give this the good bullish retrace. But now there is some hope that it has come down to the 23.6% of the fib retracement level, and also the divergence is heavy. These two factors are already there. Okay, so this can help the S&P 500 and the entire market to get a bullish retrace. Okay, so then so I will discuss this in detail in the next point of the agenda, the probable movement. Okay, so but now what we can see here is that the S&P 500 is once again 100% absolute bearish. Absolute bearish. Okay, and the trend is short term bearish trend. Now this is the Dow Jones. Dow Jones, the same thing. Okay, bearish through the Bollinger Bands, bearish through the moving averages on the daily chart, bearish through the Ichimoku cloud on the daily chart, and also the same thing. The MACD is bearish and the stochastic RSI is also a little bearish. Okay, see, this divergence may not be seen. Okay, heavy in the MACD of the Dow Jones, but it is more in the S&P 500, and then it is even more in the Nasdaq. Okay, this divergence in the MACD, right? This means that if there comes or whenever there comes this the bullish retrace. Okay, primarily it will be through the tech stocks. Okay, and the tech indices means the S&P 500 and the Nasdaq. These tech indices, okay, will get more bullish retrace, more bullish movement as compared to the Dow Jones. Okay, Dow Jones will play a supporting role only. That's it. Okay, but these tech indices and Nasdaq will gain more than S&P 500. But again, the question is that when this will happen. Okay, so that I will discuss in the next point, the probable movement. So once again, Dow Jones is 100% absolute bearish. Okay, here, and S&P 500 is 100% absolute bearish, and the short term trend is bearish, short term bearish trend. Okay, short term bearish trend, this is there in the market. Now what does this mean, short term bearish trend? Short term bearish trend means now whatever market will get, okay, this thing that you will see, it will be a bullish retrace. It will not be considered, or it will not be called as the bullish movement. There is a difference between the movement and the retrace. Okay, now the short term bullish trend is there, so whatever bullishness will be there, it will be seen as bullish retrace only until and unless somehow the market comes back into the neutral trend. Otherwise it will be seen as bullish retrace only. And what will happen when it gets the bullish retrace? Okay, very simple. When you get the bullish retrace, then at some point it will fail, and then it will come down. Next time it will breach the previous low, this is the 23.6% okay low, and it will be coming further down to 53xx. Let me quickly share this important information with you, that this is my S&P 500 knowledge transfer program. Through this program, I teach everything whatever happens in the market, how the market works, how the stock market works, the technical indicators, okay, and from the basics to the advanced, the trading strategies, okay, all of these are trading strategies, the options, okay, and the options calculator, okay, and then options strategies. Other than that, the calculated support and resistance levels for next 5 years for the S&P 500 and the Dow Jones, and then how to know the limits, okay, and how to predict the expected peak or the expected low, and how to recognize the manipulation, each and everything in this S&P 500 knowledge transfer program. So if you are someone who is looking for the long term and want to trade confidently in the stock market, want to make consistent returns, then this is a perfect program. And whenever you want to participate in the program, then I have mentioned my email address. Okay. Other than that, there are some these very small, terms and conditions. And earlier, many people have participated in this program. So once again, I have mentioned my email address in this Google spreadsheet. Okay, and I've given the link to this Google spreadsheet in the description and also in the comment section. However, if you are looking for the short term, then you can visit the shop section on my Patreon page, and you will find these programs listed there. Okay, through these programs, for example, in this program you will get 8 premium hacks and the modified technicals. Okay, these premium hacks works 100% of the times with 100% accuracy. If you are looking for the, or if you want to learn the options trading strategies and also the premium calculator, then you can go for this program. So once again, I have given the link in the description of the video and also in the comment section. You can follow that link, you can visit my Patreon page, or you can open the Google spreadsheet, okay, and you can learn more about these programs. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500. Okay, for the next week, means from March 10th, which is Monday, through March 14th, that will be Friday. So Monday to Friday. Okay, whatever is going to happen, I will discuss here. Okay, now, so first thing first, Wednesday, very important. Okay, on Wednesday, the inflation data, okay, it will be released pre-market before the open of the stock market, and this will be the we can say that one of the biggest events that the market is anticipating, okay, or will be anticipated, because if on Wednesday the inflation data goes against the stock market, then expect fall and it will lose this 23.6% and will be heading towards 53xx. Okay, if inflation data comes as per expectations, okay, or good, okay, in that case market will certainly get a bullish retrace. Okay, so next week on Wednesday, okay, this will be the major event. Other than that, on Thursday PPI will be there, but market doesn't consider the PPI. On Friday there will be some consumer confidence data, sentiments data, but again that doesn't matter as such, because on Wednesday the inflation data will be released. Okay, and that is the primary data. This means that if the S&P 500 and the entire market moves up, then it will get only 2 days. Okay, because if on Wednesday there comes this bearish negative data, inflation data, then it will complete its bullish retrace, a limited bullish retrace, and it will come down heavily. Okay, so that will be a perfect, okay, perfect scenario here. Okay, so that will be the event. Now in terms of the movement, but guys, before that, in order to appreciate my work so far, if you have liked this video, then hit like. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want these daily precise updates, precise analysis of the S&P 500 every day from Monday through Friday, every day, Monday, Tuesday, Wednesday, Thursday, Friday, as well as the stock market opportunities and the midweek update, technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now what we know is that S&P 500 failed to hold at the previous low, okay, that was there, okay, it came down, and also the closing, the weekly closing and the daily closing yesterday on Friday was below this, the previous low. The previous low was 5773, okay, and this the yesterday's low, Friday's low, okay, it was 5770, okay. So this indicates heavy pressure on the market, heavy bearishness in the market. Okay, market means in the S&P 500, Dow Jones, Nasdaq, and in the entire US stock market. Guys, one more thing you need to understand, that during the bearish trend or in the bearish trend, okay, whenever market comes down, then the market gets one chance, okay, to not to give a closing below the previous low. Okay, it can breach whenever it comes down. So this is a simple you can say a principle of the stock market. Okay, whenever it comes down, then it gets this an opportunity to not to lose, means to not to close below the previous low. However, on Tuesday the S&P 500 closed below the previous low. Okay, it has already failed this condition. So next day the any more bullish movement was supposed to be limited to the zone that was 585x. So now what I was trying to say is that, okay, this problem is there. What does this mean? This means that there will not be a sustainable bullish movement. What? There will not be any sustainable bullish movement until and unless S&P 500 closes above two consecutive closings above what? Above the previous low. Okay, that was 5773. There must come two consecutive closings above the previous low so that it opens the bullish side. Okay, bullish side, not for the bullish reversal or for the bullish trend, no, just for the bullish retrace. Okay, but yes, definitely intraday it can move up. Okay, it can breach, it can give 1% or 1.5% movement. Okay, in that case what will happen? So for that you need to understand that the S&P 500 will be able to close above 5773 only when it sustains above 579x resistance. Only and only when it sustains for more than 2-3 hours, it remains sustains. Okay, so that there comes a good or heavy possibility, just like on Wednesday, that now it will close above 579x. Okay, in that manner the S&P 500 will be able to close above the 5773. Okay, so that will tell us whether it will close in this manner or not. Okay, now one more thing. So once it moves above, then where it will be heading to? Okay, then it will be heading to the very heavy resistance zone that starts from 585x. So S&P 500 will move up and will struggle and will fail. Okay, because S&P 500 has repeatedly failed and was rejected by this zone. This zone was the heavy support zone when it was coming down. Okay, but the fall was so strong that there came two consecutive closings below the zone, then three, and then consecutive rejections, and then that opened the bearish side. Okay, so in this manner, okay, 5773 is there. So that is the condition, very first condition for any bullish retreat, for any bullish movement to be seen, or for that to happen. Then comes the 579x. 579x is my this is the resistance, okay, level. Okay, only when a sustained movement above 579x is seen, this means that 100%, okay, it will try for 585x. This is the zone that starts from 585x. Okay, and then there will be heavy chances that it will fail at the zone and it will be coming down to the zone. However, there is a condition. Okay, because Wednesday the inflation data will be released. Okay. Now, if by Wednesday the S&P 500 moves up, sustains above, closes above, okay, 5773, that was the previous low. And remember, guys, this 5773 is not my calculated support or resistance level. It is not. It is just this the previous low, this one. That's it. Okay, but it is not my calculated support or resistance level. Okay. So if by Wednesday, okay, means by Tuesday end of the day, S&P 500 moves up, sustains above 5773, closes above, there comes two consecutive closings. Okay, but most likely it will remain below 585x, the zone. It will struggle, okay, or remain below at or around 57, around this, the 585x zone. Okay, now, Wednesday, if the inflation data comes supportive, definitely two consecutive closings will be there by default, okay, on Monday and Tuesday. Okay, then it comes supportive inflation data. Heavy bullish retrace. Heavy bullish retrace to what? This heavy bullish retrace from here will be allowed to 596x. Now, 596x, so what is there at this, the 596x? At the 596x, there is my calculated resistance level. Okay, and at the same time, at the 596x, where is 596x? There. At the 596x, okay, there will be the 61.8% of the Fibonacci retracement level, okay, in this direction, in this the retrace. Okay, so two factors will be working, okay, at that very small zone. Okay, one is the 61.8% fib retracement level, and the other one is my calculated resistance level. Okay, so that will be there, and then that will create very heavy resistance. So even with the favorable data, it will test, it will fail, and it will be coming down. Okay, so what you can see here is that irrespective of anything, okay, whenever it try to move up, it is expected to come down. Okay, it is expected to come down because the S&P 500 is in the short term bearish trend. Okay, this will be the bullish retrace, it will be coming down. This will be the bullish retrace, it will be coming down, unless somehow S&P 500 enters into the neutral trend. Okay, but for that to happen, there must come back to back, okay, for the entire week. Okay, until Friday, these 5 green candles. Okay, then only. But one more thing, you must understand, the divergence is still very heavy. Okay, and I'm not saying, see, previous week I mentioned the divergence. Okay, that divergence did not work in an exact manner that we were anticipating, but it definitely worked, because without the divergence, this bullishness was not supposed to happen. It was supposed to give back to back red candles just like this, back to back red candles every day. Okay, so that was the divergence that was helping, okay, for the market to sustain during this the fall. But still the divergence is very heavy. Okay, so that divergence will also support this bullish retrace. Okay, but the bullish retrace will remain limited. This is what we know. Okay, so the very first will be the 579x will be there, that will help us understand. Then it will be 585x, and this is the zone, actually a zone. Okay, if there comes a rejection from the zone, then game over, it will be coming down. Okay, if it clears the zone, sustains above the zone, and this is a heavy zone. Okay, and it's a big zone. Okay, so many points are there in this zone. Okay, so when it clears the zone, sustains above the zone, and the data on Wednesday comes supportive, then definitely towards 61.8% fib retracement level in this direction. Okay, and also my calculated resistance level, and then eventually it will fail, and then it will come down once again. This is the Dow Jones. Okay, Dow Jones. So, but again, Dow Jones, any retrace will be limited to the Ichimoku cloud, the boundary of the Ichimoku cloud itself. Okay, although there is my calculated support level at resistance level at 43.3xx, very heavy. Okay, this is even before it hits the Ichimoku cloud. Okay, below the Ichimoku cloud, 43.3xx. Okay, so any retrace in the Dow Jones will be limited to the 43.3xx. Okay, but a closing above, two consecutive closings above this heavy resistance 43.3xx will help the S&P 500 to get or to gain more bullish retrace. Okay, so you need to understand this point. Okay, so without the help of the Dow Jones, S&P 500 will not be able to clear, to breach, or to sustain above the 585x zone. It will fail at the 585x zone itself. Okay, so I hope this is clear. Okay, this kind of fall, because now that it has breached, okay, if it wouldn't have breached, or if it wouldn't have closed below the previous low, then it would have, resumed its bullish trend. Okay, in this manner, means in this staircase pattern. Okay, but now it is coming down in this staircase pattern. Okay, so bullish trend and the bearish trend. Okay, in this manner. Now comes the bearish side. Bearish side will be seen through the Dow Jones or the S&P 500. Okay, so how it will be seen through the Dow Jones? Again, the same principle of the stock market. Okay. Okay. The previous low of the Dow Jones, okay, it was 41,845. 41,845. Okay, this was the previous low. So far, Dow Jones is sustaining, holding hand, and has never breached the previous low, and has sustained and closed above the previous low. Okay, once there comes a fall, either the direct fall, let's say on Monday there comes fall, Tuesday there comes heavy fall. Okay, or after the retrace there comes heavy fall. Okay, market S&P 500, although I'm saying that it will be coming down to 53xx, but it will not enter into 53xx. It can enter at most in 55xx, but not more than that. Why? Because the Dow Jones will not allow any more fall. For more fall to happen, Dow Jones must close below 41845. A closing below 41845. Okay, although there is a level just below this, the 41845. Okay, so I will look into that level, not the 41845, but for your understanding, 41845. Okay, so closing below 41845 will indicate more fall, continuous fall in the entire market. Okay, and this picture will be very much clear on Wednesday. Okay, because pre-market at 8:30 a.m. Eastern time on Wednesday, the inflation data will be released. However, if you are my Patreon community member, then you need not to worry about this, that what will be the outcome of that, the inflation or so. Okay, I will keep you posted, I will keep you updated, okay, through these updates. Once the data is published pre-market, then in the pre-market analysis, okay, on Wednesday, I will clear whether the data is neutral or bearish, or in any case, like, or if it is bullish. Okay, if it is bearish, then more fall to what level? Okay, I will mention the levels and the zones. If it is neutral, okay, then most likely in the neutral also it is going to fall, or it is going to fail. Okay, so in the pre-market analysis, I will mention all of this thing. And guys, if you are also looking for these daily precise updates of the S&P 500 every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now in this case, okay, once there comes a closing below 41845, okay, then what will happen? What will happen in the Dow Jones, and what will happen in the S&P 500? Once there comes a closing below that level in the Dow Jones, and then there comes two closing, although one closing is more than sufficient, because when there comes one closing below that level, then S&P 500 will be trading in I think 55xx already. It will be there. Okay, so once there comes a closing below this level, then S&P 500 will be ready for 53xx. Okay, and it can gain, or it can achieve the 53xx, okay, within a week. But the only problem here in achieving the 53xx is the heavy divergence. Okay, this means that even if the market comes down, even if this condition is fulfilled, okay, the S&P 500 will be trading in 55xx. This much is allowed. Double 5xx in 5500, okay, xx. This movement is allowed. But anything below 55xx, okay, because of this heavy divergence in the MACD, See, this heavy divergence in the MACD is not allowing a movement below 57xx. Means even if S&P 500 trades in 56xx, then also this is not allowed. However, in one condition this will be allowed to 55xx. That condition will be that at first there comes a bullish wick trace. Okay, on Monday and Tuesday there comes a bullish wick trace, good bullish wick trace. Then what will happen? In that case, the divergence in the MACD, it will normalize a little. It will normalize a little. Okay, but this much is sufficient to open more bearish side. Okay, so in this case or in this manner, it is allowed that if there comes two green candles on Monday and Tuesday, and then the fall continues from Wednesday onwards, in that case to 55xx fall is allowed. Okay, but then again there comes a problem whether it will happen to 53xx or not. Very little chances, very limited chances, and even if there comes like 3% or 4% fall within a day, then intraday it will recover 3 or 4%. Okay, because technically in that case it will be heavily saturated. One more thing you need to understand, S&P 500 is now trading to, okay, or very near to the historical the divergence, very near to historical divergence, okay, volatility and everything, historical levels. This means that continuous fall is not allowed, but a fall in this manner wherein the S&P 500 is allowed to retrace at first and then comes down, that fall is allowed, but continuous fall is not allowed. Continuous fall may happen a little, a little, a little is allowed, but not continuous fall is allowed. Okay, because of these heavy factors. One more thing that this will definitely help the S&P 500 and the entire market to get a very heavy bullish trace, very heavy bullish trace, 5 to 6% bullish trace. What will be that condition? Okay, yes, that is also there in the Dow Jones. That condition is that on Monday it gives a red candle, red. Tuesday it gives a red candle, red. Wednesday the inflation data is negative or goes against the stock market, against the Wall Street, comes a heavy gap down open. Okay, by Wednesday S&P 500 will be heavily saturated. Okay, will be at the historical levels, historical divergence, historical means at everything it will be there. Okay, heavy gap down open on Wednesday in this manner. Okay, and then a heavy bullish trace. Not this heavy bullish means this will not happen intraday Wednesday itself, but on Wednesday there will be a condition, there will be a candle, or there will be a condition that will then change this trend. Oh, sorry, it will not change the trend, it will give a heavy bullish trace. Okay, and then this bullish trace will be good, like hypothetically let's say it is around 5500, okay, by Wednesday, and then it will be to let's say 5900 psychological level, 6%, or the zone itself 5, or this is the zone 585x around. So you can anticipate 5% to 6% bullish trace in the market. Okay, so on Monday and Tuesday it will be quite clear. Wednesday in my pre-market analysis, and then the midday update. Okay, after 3 hours around that will be 12:30 p.m. Eastern time. Okay, I will clear this thing. Okay, and if this will be happening, and if you're my Patreon community member, okay, then you can change. Okay, then you can go bullish. Okay, because then there will be the bullish retrace, bullish reversal in this case. So this means that this condition is very much favorable, very much favorable. Okay, and one more thing, guys, you need to understand. Okay, I've also discussed this with my Patreon community members. And also, I'm thankful to my Patreon community members that they ask me, these are good questions, okay, every day. That helps me to improve my analysis. And through this question, okay, there is a constant communication. Okay, these are good questions, beautiful questions. Okay, and I answer and I help my Patreon community members. Okay. So what you need to understand is that as of now, these two people, okay, everyone knows, okay, these two. One is elected and one is non-elected. Elected and non-elected. These two are messing up. Okay. These two are messing up with the system. Okay. There was the system, there is the system, there will be the system. But they are now messing up with the system. Okay. Through their comments, through their acts. Okay. We are seeing means the heavy volatility in the global stock markets. Okay. And the thing is that these two, one is elected, one is non-elected. These two have a history of this kind of creating heavy volatility in the market. Okay. So first they will bring down the market. Okay. Then those who are supported by these, okay, then they will buy here. Okay, this will be the dip, they will buy here, and then they will give good comments. Okay, then they will speak publicly about good things. Okay, and then they will simply reverse whatever activities they did. Okay, and then the market will retrace, market will go bullish. Okay, and then there will be a point, then again they will start talking negative or these things, and then the market will tank, so there people will book the profits. This is how it works. Okay, so those who say that the market is not manipulated, this is the stock market. And the thing is that in order to rig the market, to manipulate the market, hundreds of billions of dollars are needed. And those who have these hundreds of billions of dollars, they have very good understanding with these two. One is elected, one is non-elected. They have very good understanding with these two. Okay, so I will not name them. Okay, but I hope that you understand who I am talking about. And one more thing, now you must understand that this fall, okay, if it continues, okay, and this fall can continue. One more thing, this fall can continue. Why and how? Okay, because the Federal Reserve Chairman, okay, his tenure will end in May 2026. Okay, and the president is raising the tariffs every other day. Okay, he puts tariff, okay, on this country or that country. Okay, so this tariff is actually increasing the inflation. That is why there are very little chances that the inflation will be seen as per or will come under control. Okay, chances of stagflation or more inflation, heavy inflation are there because of this. So these are tariffs are there. Now, in order to compensate the tariffs, the Federal Reserve must give the rate cuts. Okay, now there is the problem. Okay, Feds are not ready for any more rate cuts. Okay, yesterday also the Federal Reserve Chairman has mentioned that they are not in a hurry and they can keep the rates at this peak. Okay, higher. Okay, means higher for longer time. Okay, so now this thing is a perfect mismatch. This mismatch is creating a correction, and not just a correction. Correction was already there. This is creating a recession or a good recession globally, and the condition will not improve until May 2026 or until the president himself, okay, simply reverse the tariffs. So now the president has imposed tariffs. Okay, that has created this the fall. Okay, or is creating the fall. This chemistry is not working. Okay, all of these are factors. But now if he reverse these things, okay, and he takes some good measures, supports the economy. In that case, correction is the best case scenario. Correction or somewhere between correction and recession. Okay, but not the recession. Somewhere between correction and recession. Otherwise, recession is inevitable. Recession will happen. This recession will be very good. Okay, and if you are thinking that the recession will be limited to 5xxx, no, recession will be limited to somewhere in 4xxx. Okay, because we need to count, we need to calculate the 50%. Okay, 50% of what? 6147. Okay, so that is not even 4xxx. Okay, that is in 3xxx. Okay, so that I will discuss in detail sometimes later. But now what we understand is that if it try to move up, if it remains green on Monday and Tuesday, very bad. More fall, heavy fall is allowed. Okay, not allowed, but it will happen. Okay, if it keeps on coming down on Monday and Tuesday, and on Wednesday there comes a situation wherein there comes heavy gap down, open conditions are favorable for the bullish wood trace, then a heavy bullish wood trace. Okay, so these two scenarios will be there in the next week. But again, whatever will happen or whatever is going to happen, I will keep you posted. I will keep you updated through these daily precise updates, which I give to my Patreon community members every day from Monday through Friday. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. And other than that, guys, if you want to become self-reliant, you want to learn the hacks, okay, the modified technicals and the option trading strategies, then you can opt for any of these programs and you can visit the shop section on my Patreon page. However, if you are planning for the long term, for the big picture, for consistent returns, okay, then you can participate in this program. This is the S&P 500 Knowledge Transfer Program, and this is the Google spreadsheet, okay, so that I've shared in the description of the video and also in the comment section. So guys, once again, in order to appreciate my work, hit like and please subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.